Welcome to StockOdds Odds and End podcast. I'm Dave Singh here with Rob Friesen, trying to get our bearings on the week ahead and seeing what kind of insights that StockOdds has in the data for our trading in the week ahead. Good evening, Rob. How's everything?
Not too bad. Nice to have a long weekend, get caught up on some stuff, and there is a light volume day expected tomorrow, just because some countries are offline still, as far as limited trading or no trading, and there'll be people taking an extra long weekend out of it, right? So expect volumes to be light, which means that trading can be a bit different, both on the upside and downside.
Sure.
People forget the reason that prices decline generally is because there's just absence of buyers, and the reason that prices rise, there is demand, but people also take profits along the way when things are going. So liquidity is usually increased when things rise, and liquidity is often decreased as things fall. So it could be a bit of an issue if there's not that many buyers lurking around tomorrow.
Good. Well, we had a shortened week the past 4 days. There's also pretty weak, a lot of weakness there. The NASDAQ was down 4.43% in just those 4 days, and we closed at the lows on that final trading day at Thursday. And the futures are set up to be weak again for tomorrow. Some of the themes still persist. Oil's strong again. We've got the 10-year and multi-year highs again, making new highs, 2.87% there. A lot of earnings in the week ahead, especially in financials and things even like Tesla. So it's a tricky week. We're post expiration now, and we're in post mid-month seasonality, and we're not close enough to the end of the month effect yet. So we're in the strange kind of pocket here in terms of timing.
And we're still in mid-month seasonality for another few days here. So because it started on Wednesday, didn't it not? Yeah, so it started Wednesday, and will carry us over to, let's see, that's the 9th, 10th, 11th, 12th, 13th. So actually, it extends until Thursday of this week, mid-month seasonality, right? So like we still got some of that stuff that you researched last week that would be hitting starting Wednesday, and we did see a bit of that follow through on Wednesday, Thursday, especially in some of the basic materials and things. And this week here, we got a bit left. Let's take a look at where the futures are at now, and then we'll run through some earnings so we get our head around what's coming up. So the Dow futures are off 0.22% or 77 points. Right when they opened at 6 p.m. Eastern time, there was an immediate drop. So there's a bit of pressure on all these futures, with the exception of Europe, actually. So S&P is down 0.51 at the moment, or 22.25 points. NASDAQ is off almost a full percent at 0.92, 128 points, and the Russell is off 0.62. So the Dow looks the best, and the Russell next best, and the NASDAQ is the worst, and S&P's next. But those S&P and NASDAQ charts don't look very good overall, to be honest with you. The DAX is actually up 0.27%, up 38 points. So the German DAX is up. And the VIX is up as well, of course, with volatility rising as things become more concerning and risk is still on the table. The VIX is up 3.11%, back up to 24.15. So let's hear some earnings for this week.
Yeah, so tomorrow we've got a couple financials. Bank of America is a big one, Charles Schwab, Synchrony Financial, and Bank of New York Mellon. So a lot of the financials that could be moving the XLF. And then come Tuesday, things like Lockheed Martin, Halliburton, Netflix, Johnson & Johnson, and IBM. Those would be some bigger players. And then Wednesday, we should get some big ones like Tesla, right? That could be talked about quite a bit. And some of the airlines, United Airlines, Procter & Gamble, a good mixture like that. And on Thursday as well, we have American Airlines, I believe. Yeah. Thursday, we've got American Airlines, Freeport McMoRan, so copper, Union Pacific, Dow Chemical, Philip Morris. So maybe more of your Dow Jones stocks on Thursday. So there are going to be some big market cap stocks this week. And tomorrow, I think the focus will be on financials, though.
Okay. Did you remember when, the war was starting and oil started to, really take off?
Mm-hmm.
Then I looked for some smaller cap oil stocks and really had some good fun with some of those. I'm looking at the same theme as this war continues to march on, and as we're sending more and more, another 800 million worth of munitions and things over there to the Ukraine. I'm looking through the entire defense contractor and aerospace area, and pull up, if you got charts there, pull up a chart of like LMT and tell me if you think it looks a little bit top heavy. We're not advisors and we're not analysts, but just take a look at the chart and see if it looks a little bit top heavy to you.
Yeah. I mean, it peaked out early in March there at like 480 and pulled back quite a bit. And it's been struggling the last 4, 5, 6 days.
Yeah.
After a surge trying to, so it's a huge gainer. I mean, we're up from.
Well, for sure. I mean, I looked into some of the reasons why it seems to be struggling at this point, not just on a technical basis, because it's already had that high from March that you said, but it's had cost overruns and poor quality on a couple things, and some of the contracts have like literally doubled. And so, I mean, it's still going to have the contracts and the revenue ultimately, but I think that because of these issues, it's been struggling. But then it got me thinking, and I looked through the whole group and a lot of the small cap stuff, and I found some really interesting gems that are, under 2 billion in market cap that are actually part of the supply of some key pieces of this whole puzzle, considering war. And I thought there might be some great pairing opportunities, or just to use them in the baskets of small caps. So I'll let you guys do your own homework. I just thought I did this with oils and it did pay off. And I'm doing it right now with the defense contractors. And I'm also doing it in the gold space, because I think that there's still some potential for gold to continue to move up. It's holding okay. I mean, it's kind of was in a channel and started to rise out of that. So I think
is the idea to be longer the smaller, like sub $2 billion defense contractors and shorting some of the mega ones within the group?
Either to use them as the longs in a small cap basket kind of thing, or to just carry a bit for the future, or pair them off with the bigger best in class that have sort of started to become fully priced in and are struggling to move higher, whereas there's more room for these smaller ones to come up if things are continuing, right? I'm looking at a couple things that concern me, and this is that the US and other countries that have agreed to supply arms to the Ukraine are depleting their own munitions, right? So I think this is a concern, which means that it's going to have to be put back into these budgets to replenish, right? So I'm not comfortable with a number of things that are going on. One, the oil reserves being released just to lower the price of oil to the consumer. Okay, I think I don't know if that's too smart to take your strategic oil reserves and use them for that purpose. Okay, so that bothers me. I mentioned that before, I think. The second thing that bothers me is the depletion of our munitions and arms. Granted, this is a very uncomfortable situation to have to deal with what's going on with Russia invading Ukraine, but and a generous nation does try to help out. But I'm just concerned that we're depleting at a pretty rapid pace.
Sure.
And then you got to do this. You got to look up the U.S. national debt clock, right? It's at usdebtclock.org, and there's a lot of different tabs that you can look at. Gold supply and energy output and other precious metals and auto sales and mortgage loan calculator and all that. You can spend a lot of time looking over everything, but that debt clock just keeps on trucking, right? Yeah. Over 30 trillion national debt now, and it just keeps on ticking away. So there's a number of things that are concerning, and I think there's opportunity for traders to look at some of these trends and not necessarily always focus on playing the leaders in the group or the best in class, because the apple cart can turn and the focus might be better on some of the small caps that are upcoming, right?
That's a good idea.
I mean, I often see this when there's a big move, you have the leaders take off first, and then it sort of rotates down into the laggers and the ones that were forgotten. As those things get fully priced in and mature, people start looking for other nuggets in the group, and that's why I'm kind of looking at getting ahead of it on the gold and basic materials sector and defense contractors, part of the industrials. Okay. Good. So this week is taxes are due tomorrow, as most people probably are ahead of things and got that done. But there is probably a seasonality right after tax day. So I can't tell you exactly what that is. Do you have any notes on it from previous years in terms of what usually happens after tax day?
I don't, but
okay. Well, there is a bit of seasonality to it, I'm sure. Our almanac doesn't point out that specifically, but we look more at the end of April, and we'll talk about that next Sunday.
The logical thing would be people sell prior to tax day to generate funds. So a couple days before that could be weaker because of that, and then just like an ex-dividend date, right? Coming out of that, it's a little bit less pressure on selling. So,
do we have much to rally on now, though? Like, would you say like there's a lot of? I mean, we've had this tug of war between bulls and bears here recently. We get such mixed messages from people they bring through the media all the time. Like, this person's like, this is the great time to buy, and then someone's like, we got a lot of downside risk, and it seems pretty balanced in terms of bulls and bears in that sense.
But it could be like pessimism fatigue, right? Because whole month of March, right? Fear of the war escalating. Are we going to get drug in that much deeper? So the whole month of the Ukraine war, and even the media is covering it less now, right? So we've had that thing in there. The inflation, the Fed, increase in interest rates. So much is out there now. Maybe people are just fatigued with all the pessimisms, which would be kind of contrary, right? So then this would be a good time to start turning the corner. There's so much negative for the past 6 weeks.
Although I do think this nuclear option is something that's gotten a little bit more coverage recently. I don't think it was a big thing early on in the war, but I think as things get stretched out more and more. We're in day 50 now, aren't we? It's like, if it's true that, you know, the war hasn't gone so well for Putin, if that's true, then, you know, is he the kind of person that would use that nuclear option, right?
Yeah.
And I think that's just growing. I think it's gaining some more ground. I mean, Zelensky was saying it the other day, and blah blah blah, right? So, and that kind of sends some shockwaves.
Yeah.
I think it puts more risk on the table, just if people buy into that, right?
Mm-hmm.
And we don't know what's going to happen. I mean, war is unpredictable, right? So there's all kind of banter out there. There's people saying, well, you know, the U.S. is using Ukraine as a vehicle to weaken Russia.
Mm-hmm. I've heard that quite a bit.
You know, that might be it too. But they're also supplying a lot, and so listen, it has to be taking a toll on us, because we've had military spending quite a bit cut back. I mean, it didn't really come into this last bill in September, you know,
Mm-hmm.
as far as the budget, there was really, because we were planning to pull out of Afghanistan, like, you know, or that was already in play, blah, blah, blah. So I think that there wasn't a big allocation, and, you know, for years, even under Obama, we didn't have a lot of military spending, did we?
No, it's been
so
quite
I mean,
for quite a while.
I can imagine that we're getting cut back quite a bit. But here's the thing: is that if we are getting depleted, that only puts more pressure on. Hey, we've got to do something to shore this up, and so we got to throw more money at it, which means more military contracts, and that's why I'm thinking some of these small caps have room to run. I'd be interested in your take on it. Maybe when you get some time, Dave, run through all the stocks in the sector,
Mm-hmm.
or the industry, not the sector. Run through all the stocks and just take a look and let me know if you see some gems in there like I did. Okay?
That's a good plan. Yeah.
All right. Well, we'll call it a day, and I know it's still kind of a holiday weekend here, so we'll call it a day, and have a good one.
All right. Good luck. Thanks.
Yeah, cheers.